Masters of innovation.
Looking towards the future with anticipation, raising up the technological conversation from the east to the west and all across the nation. If knowledge is the cure, then we got the medication. We're the masters of innovation, the masters of innovation. We're the masters of innovation, the masters of innovation.
Welcome, everyone, to the Masters of Innovation. We're here with the cutting-edge knowledge you need, as always. I'm Garrett Wagner, your Entrepreneurial CPA, co-host, and man with a new side gig, a principal of the Wagner Elementary School in my own house. And I'm happy to tell you it's not going well. Speaking of teachers, I'm joined by the man, the legend, the man that can't teach middle school, but he can teach you how to make a fridge that launches beer on command. Joe Brunsman, back again. Joe, how's it going?
I am currently here in my bunker, 600 feet below ground. So got plenty of whiskey and just riding out the storm. How about you?
I see you've got the new like hunker down bunker attire, like the lumberjack. You got some wood down there you're splitting with an axe?
Yeah, I was chopping wood earlier. I got my wood burning stove. It's
Okay.
living rough.
Living rough. I like it. Well, Joe, I thought today we could talk about one of the most popular things right now, payroll protection program, P3, payroll loans. I mean, firms are dealing with just so much chaos, confusion, hair-pulling challenges, you name it. We're taking the brunt of it. We talked before, how do you push back against your bankers? We talked about in other shows, this program, how to deal with your clients. And today I thought we could deal with one of that kind of like lingering question. We're not thinking about it today, but at the end of the day, when the dust settles in 6, 8, 10 months from now, what's the exposure for us as a firm having helped their clients with these payroll loans? Because this is something we don't usually do. We're used to doing audits, tax returns, bookkeeping. That's payroll. We're used to those. We know the insurance risks. What's our exposure when it comes to these payroll loans?
So that's a really good question. It's something that we've been, really trying to deal with over the past couple of weeks as this, I guess I should say, disaster has slowly unfurled itself. Probably the biggest thing I think that CPA should know is that, if there's really kind of a line in the sand between helping your clients, right, like an engagement to help them with that versus acting as an agent of the bank. So all of that really comes back to, and we can kind of chat about this in a minute here, all that really comes back to your professional liability insurance. So if you're acting as an agent of a bank, that's probably not covered under your insurance policy, because most professional liability insurance policies, they have a clause specifically in there that talks about if you're acting as an employee, manager, right, director, et cetera, of an outside entity, that's not covered under your insurance policy, right? So you really have to be careful about, what that line is in the sand and making sure that you don't cross that line. Probably the best thing. Go ahead, Garrett.
So speaking of the best thing, so when this first hit, I got a ton of emails. I saw a ton of Facebook posts all over the place. How to make more money as a CPA firm, act as an agent, get your fees, like you got to make thousands, millions of dollars. So what you're saying now is, as great as those like get rich quick schemes sounded, you could be totally screwed when something goes wrong because you decide to be an agent instead of just a consultant advisor in this process.
Yeah, you could certainly get burned. And, we're kind of seeing that. We could chat about these alleged audits that the government's going to be doing of these loans later on the line. But, let's say something went wrong. You were acting as an agent of the bank with your client. Let's say they come back and they bring a claim against you. You didn't get them enough money. You didn't help them fill out the paperwork correctly. There was some material misrepresentation inside of that application, and now they're getting audited, or they have to pay that money back and they don't have that money. You really got to be careful with that. Once again, kind of going back to that line in the sand of, are you assisting a client and they're signing the dotted line, right? And you're operating as your CPA firm doing that, you're generating fees, or doing pro bono work. Vice, you're acting as an agent of the bank, and I mean, who knows what those agreements were between the bank and the CPAs that could have been acting as agents for those banks. If somebody did that, I would encourage them to, one, look at, hopefully there's a contract that they signed with that bank, that there's some sort of indemnification there if that happened. But nonetheless, if the firm gets enjoined into that lawsuit by the nature of that CPA acting in that capacity, 99 times out of 100, their professional liability insurer is going to go, this isn't our problem. You got to talk to the bank, unfortunately.
Yeah, mostly for what I've seen, the agent stuff was written in by the SBA, and they were going to kind of pay them out as part of this process to the quote unquote agent. I'm not aware of many situations where there's any kind of agreement between the bank, Bank A and the CPA firm. It was all just kind of in the overarching language. There's agent fees in there that don't go to the bank. And that's what people thought they could, hey, you're a CPA firm, you can get that 1%, 2%, whatever it is. That was going to be your get rich quick money. But unfortunately, you've kind of, like you said, you've crossed that line in the sand.
Totally. And it's, we talk about this all the time offline, but, the government's a sledgehammer, not a scalpel. So it's entirely conceivable that they didn't even contemplate when they were pushing this law together kind of last minute that there could be some claim that arises out of this and it's going to get burned. So if anybody falls into that category that's watching this video, I would just encourage them, if that work didn't go through the CPA firm and you think there could be some trouble, start researching that now. Right? If you can get a hold of any contracts with the law, start digging through that. If you need help, seek legal counsel to assist you with that. Hopefully they'll have some better recourse for you or some more information as it comes out. So it could be weeks, months, years until some more information comes out on that, but better to do it now than wait for it and get burned.
All right, so step one then, if you're an agent, you already went down the wrong path, seek help today. Now, how about those firms, they didn't act as an agent, maybe they did pro bono work, maybe they got paid for it. What kind of exposure do they have, and what should they be doing to be proactive to mitigate any kind of risk they might face today?
I would say probably the best thing they could do is talk to their clients and make sure their clients are keeping some sort of supporting documentation for all of this information. So whether it's, making sure they have a copy of that application that's on file, and that's kept in a secure location, to, hey, where's this money going to? So that when these audits ever happen, and I'm dubious that they will happen to the degree that they've said, but if that ever does happen and someone is the number that gets picked out of the hat, they can at least support, right, in good faith, hey, this is where the money went. This is why I needed the money, to hopefully try and avoid any future additional problems because of that.
And that's kind of the best case advice we always get in general as a firm is, we tell our clients, keep supporting documentation. Anytime you do with the IRS and audit, keep supporting documentation. Then Joe, with that kind of material accurate and exposure, one of the big caveats was just, they made this super broad statement. You were impacted by COVID-19. They didn't define impact or what it was. What kind of record do you think firms should have their clients keep on that? Is it just a signed statement by the client to say we're impacted by that? Or what do you think they should start thinking about, if anything, to be proactive?
Well, so, to go back to kind of your first point there, if nothing else, the firm at least needs to document that they've told their clients that they need to keep supporting documentation. So step one, COI for the firm, right? Tell your clients, keep it in writing, make sure you keep supporting documentation for XYZ. In terms of, how to evidence being impacted by that, definitely you can look at, okay, this was previous year's revenue for this time frame versus current year's revenue, right? This is the payroll that I had to support. This is the revenue drop that we had. Anything that you can put together that can evidence that you faced some sort of material hardship, right, due to these circumstances is really going to help you out. But like you said, it was super broad, probably wasn't written the best in terms of laws that I've seen and read. It's really, nobody has all the answers right now. So you need to do the best you can, really try and get ahead of that problem and make sure that you have that file on hand, that if you get that phone call, you can immediately say, I'm more than happy to assist you, right? In conjunction with probably legal counsel and my CPA here. Here's the supporting documentation I have that essentially validates my position for doing this. And this is where the money is gone. This is how much is left, or if it's all gone, et cetera.
Okay, and that sounds like good overall advice as well. Keep supporting records, be ready for it. But I think at the end of the day, I don't think firms should stress about it too much, that kind of broad risk of who qualifies for it, because the rules are so vague. Once again, it was the shotgun approach, not the scalpel approach. And almost every business today was impacted in some way by COVID-19.
Yeah, I'd agree. And I think there's probably going to be a lot of legal action and legal precedent that's going to come out kind of surrounding this. So it very well could be that the government tries to claw that money back. Then it has to go through the legal process to say, hey, this particular circumstance validated or not. And I would encourage firms to really kind of, keep on top of that as that case law progresses. But you're right, it's super vague.
So speaking of case law, I don't know if you saw this today, Joe, you follow the news. I believe it was out of Michigan. There was several businesses banded together. A particular class of business across the board in Michigan was shut out of payroll protection loans. They sued.
Whoa.
They won. Strip clubs.
That's right. I did read that. Okay.
And the judge pretty much said, like, the law does not stipulate that the business does not qualify for this based on what they do. They didn't put that in there. They just said you were impacted by this. They were clearly impacted by this. The moral ambiguity or questions of a business is separate from this. Was one of the things the judge touched on in his ruling was they hit what the law required. Period. The end. You cannot put extra stipulations on top of it.
I'd agree. I mean, if I were to be so bold as to put my feet in the shoes of a adult dancing establishment owner, I would say that, kind of go full circle, that kind of court case probably costs money at a time where they're probably already hurting for money anyways. So, we can kind of extrapolate that into, let's say, somebody who already got money and now they're worried about that money being taken back. It just goes back to supporting documentation, correct? Which is have your ducks in a row, have your file in place. So that way, if you have to go forward, you at least got something to stand on.
So given that, okay, don't be an agent, materially accurate in what you do, have supporting records. Let's kind of theorize a little bit on that final point of, what's the possibility versus practicality, do you think, of audits being done? I think on my side, it's a great political talking point. I don't see the SBA, the IRS, or anybody having the resources to do audits. The other interesting rumor I heard related to audits was that banks were going to hire CPA firms to, quote unquote, audit the forgiveness aspect of this.
I think that, maybe that's feasible. That's obviously going to cost yet more money. On top of that, you and I both know that the probability of, say, the IRS auditing your tax return every year, what was that number we came up with earlier? 0.05% or something like that. It's something tiny and minuscule. And quite frankly, the IRS doesn't have the manpower to do full audits in a normal year, much less a crisis year. So I think realistically, people probably should be pragmatic and plan for, okay, if I get audited, here's how I validate these expenditures. Here's how I validate getting this loan. Knowing that the probability of that is probably astronomically low. Like you're probably more likely to get crushed by a vending machine than you are to get audited because of this loan process, but who knows?
Or get
Who
crushed by
knows?
that beer launching fridge you made.
That was a good beer launching fridge.
But yeah, I'm with you on that. It's also the impracticality of it. And like we saw in the strip club example, okay, the next step's going to be to sue back the government for this, wanting to give the money back. And it seems like the court case is already kind of leading towards you complied with the law. You complied with the program.
Mm-hmm.
The program was super vague and generic. You complied with it, you're good. Adding stuff on later on didn't seem to work. But let's dive into this, Joe. I mean, if you can imagine the impracticality of a bank hiring a CPA firm to quote unquote audit the payroll protection forgiveness documents, talk about outside scope for professional liability insurance. What would they really hire us to do? Just think how much process and work that would take from an actual liability standpoint. Because once again, now they're hiring independent third-party contractors, us, to do their work. And they're going to want us to take most likely some level of responsibility over that. I can imagine all the CPA from insurance companies are going to be like, that's a big fat no.
Well, I mean, I guess I'd really have to delve into the language because I've never really run into a scenario like that before. I mean, I guess in theory, you might be able to do it. But you'd really have to be particular about what that engagement letter says, where that order is coming from, right? Like if it's a government order versus a bank order, we'd have to really dive deep into, okay, what's that potential liability there that's placed upon the firm? Who's actually who is the firm actually working for? Is it working for the government? Is it working for a private bank? That would be interesting to roll through that scenario. But you're right, nonetheless, that's not an engagement that you would just sign on a Friday afternoon and go about your day. That's going to take way more investigation to unravel that one.
Right. And it's an interesting theory, but I just don't see, once again, the practicality. It can be this tremendous shotgun approach. But I think the chemicals of the world are going to quickly be like with the agent stuff, you get that email being like, well, you cannot audit this. You cannot do agreed upon procedures. You cannot do any kind of a test or consulting services. You can here's a really generic engagement letter, almost like a comfort letter. We reviewed these documents and we take no stance on their accuracy. We looked at them. They're there. They're documents. There's records.
They exist. Yes.
They exist. And we take zero liability over the validity of the information, where it came from, any of that stuff. We're just yes, this is 200 pieces of paper for client XYZ. Thank you. Yeah,
there would be huge caveats that would have to be worked through. There would have to be, there's massive potential liability there, potentially, uncovered claims. So you're right. It's a really interesting scenario to think through. Hopefully it doesn't get to that point. But I guess we'll see. It's a weird world out there.
We shall see if it gets to that point. If this becomes more than a rumor, we're going to be back and we're going to dive into that. I see Joe's wheels are already turning. He's writing a whole other book on banking services for CPA firms. So hopefully we made you feel a little bit better about the payroll protection program exposure inside your firm. Hopefully you didn't act as an agent, so you're not worried about that. Keep the records and don't sweat too much the audit risk. That's it for this show. We hope you gave you the knowledge you need to be the master of the innovation in your life. Don't forget, click to subscribe to the YouTube channel. And as always, we challenge you to take action to change the world and invest in yourself.